Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today we've got Katrina Glogowski, angel investor and attorney, to talk about how cannabis banking numbers are slipping, but loans might be increasing. So it looks like a number of financial institutions serving the cannabis-related businesses dropped almost 5% from 729 in the beginning of the year to 695 as of June 30th, according to data by the Financial Crimes Enforcement Network, or FinCEN, which is part of the U.S. Treasury Department. So they listed a number of possible factors for the reduction in cannabis banking opportunities, such as the financial regulators have issued separate guidance for hemp, and so those activities are no longer included in the reports, as well as some cannabis businesses closing temporarily or permanently because of the pandemic, as well as some banks were late in filing STR, suspicious transaction reports, which are required for federal data.
Josh, the burden put on a financial institution handling an openly cannabis-related business account is horrendous. And I don't blame some of the smaller folks for stepping back a little bit if that's what these statistics are saying. But I do think a large part of it is hemp, which is not cannabis, as you and I know, but most folks have their heads under the sand, especially the regulators that don't know the difference. And so hemp being in a category all by itself might truly account for the drop alone.
Yeah, so KYC is know your customer. And so banks with the Patriot Act have required to know your customer in order to figure out the flow of money and avoid, illegal activities. But if you're going to buy hemp from Lebanon, for example, I'm not really sure how you can go in and figure out all the KYC requirements to the exact specifications and still remain in compliance. It's really difficult with an international commodity like a flower, like hemp, that has so many different regulations, that I see a lot of troubles occurring with small businesses not being able to remain compliant. For example, if a bank can't even file the proper suspicious activity reports or currency transaction reports, like that's a no-brainer. That they're prompted on their computer to fill that out. So if that's happening on the bank side, imagine what a silly small little entrepreneur growing a flower, they're just not, they're not built that way. Farmers aren't really compliance specialists. So I see a lot of trouble leading up to full legalization opportunities. There's going to be a lot of issues in the meantime.
Yeah, and the SARs, the suspicious activity report, the SARs are what give the banks the heartache. These are cash-heavy businesses, and anytime there's a transaction involving more than $10,000 of currency, you have to fill out this report, which takes time. That's why you see like $1,000 a month for the privilege of banking, because the banks have to do these reports every single time. And if you don't have a adequate compliance staff to make sure that they're done, period, that they're done correctly, period, and that they're done timely, period, then you have a problem, and you're risking your federal charter if you're a bank, or your certification if you're a credit union. So it is a ridiculous burden on the small entities. And the reason I say small entity, Josh, is because the big five banks never touch cannabis. They're not going to touch cannabis at all. So it was mostly credit unions that were putting their toe in the cannabis banking water. And the credit unions, unfortunately, are usually smaller and bear the burden of filling out all this paperwork. And, it's just, keep your fingers crossed for the SAFE Act, Josh.
Yeah, that's right. Yeah, a lot of these banks, credit unions being in state, are easier to work with hemp and cannabis companies because a lot of the bigger banks are multi-state, and then you have the cross-state issues with the feds, and so it's easier to get a local bank and or credit union that's in state. And According to the report, some of the financing or some of the money that's being lent out is going towards cultivation and processing equipment and some commercial real estate. So it is, I guess it is going towards plant touching to a small certain degree rather than just ancillary that we've been hearing about for so long. So maybe that's a good step towards the right direction of lending to the actual farmer.
Well, that is certainly true with hemp, Josh, where the USDA program put hemp under the umbrella of loans and insurance for the programs promulgated by the USDA. So that might be why. I am not aware of any financial institution actually lending money to a cannabis business. Maybe there's some out there. They're keeping it quiet, but certainly not on a routine basis. Hemp is a different story, but cannabis, I haven't heard of any financial institution, even a credit union, actually lending money.
I haven't either. But if you guys have, let us know in the comments. I want to thank my guest, Katrina Glogowski, angel investor and attorney. Thanks for being back on the podcast.
Thanks, Josh.
With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.